July 17, 2026. 5 e-commerce fintech infrastructure stories. Disclaimer: news only, not legal, medical, financial, or official advice. Do not treat anecdotal stories as advice. SEO trend cues used for this script: AI commerce, real-time payments, RegTech, treasury automation, tokenization, B2B payments, digital identity, e-commerce compliance, institutional markets, and market infrastructure. Current search result metadata and sector headlines clustered around AI in online shopping, digital payments, RegTech funding and compliance automation, tokenized financial market infrastructure, and e-commerce legal obligations. Payments. +3. 1. Corporate treasury and cash flow management, the cash console every e-commerce CFO wants before the next shock. Corporate treasury is moving from a back-office cash-counting function into a real-time command center for e-commerce operators, marketplaces, logistics platforms, and public fintech-adjacent companies that live or die by settlement timing. J.P. Morgan's 2026 payments outlook frames the pressure clearly. Finance teams are prioritizing liquidity, working capital, connected treasury, programmable automation, and blockchain-enabled payments as trade tensions, conflict risk, and AI investment reshape cash demands. For e-commerce businesses, the practical issue is that revenue may be visible instantly on a dashboard while actual cash is delayed by card settlement, marketplace reserves, refunds, chargebacks, ad spend, and inventory prepayments, making liquidity visibility more valuable than headline sales growth. The positive technology story is that real-time liquidity tools, ERP and TMS integration, virtual accounts, automated reconciliation, and intelligent cash sweeping can turn scattered balances into a living map of the company's financial oxygen. That matters to the stock market sector because investors increasingly reward companies that can convert growth into cash, not just traffic, downloads, or gross merchandise volume. The futurist angle is almost orbital. Before commerce platforms can scale into autonomous AI shopping agents and even future space colony supply chains, they need cash systems that know where every dollar, tokenized deposit, refund, and supplier payment is at mission control speed. J.P. Morgan. Legal subpoint. E-commerce treasury teams should treat electronic contracting, recurring payments, disclosures, and data-driven payments as legal infrastructure because U.S. digital business guidance emphasizes e-sign enforceability. FTC unfair or deceptive practices risk, state privacy obligations, and payment-related consumer rules across online commerce. ICLG. 2. Enterprise risk management. AI commerce is growing up, and risk teams are getting a seat at the bridge. Enterprise risk management is becoming the nervous system of e-commerce finance because the same tools that accelerate online buying also expand exposure to fraud, privacy claims, third-party outages, algorithmic pricing disputes, and AI governance failures. The COSO update released in 2026 describes new guidance aimed at moving risk management from documentation toward decision confidence and real-world impact, which fits a market where boards need risk data tied directly to capital allocation and digital growth. In e-commerce, now has to connect cybersecurity, vendor concentration, payments fraud, customer data processing, platform policy shifts, marketplace dependency, and operational resilience into one view, instead of letting each department track its own version of danger. Recent digital risk commentary highlights fast-moving privacy, cybersecurity, AI, website tracking litigation, third-party data sharing in financial services, and AI agent vulnerabilities as issues that organizations are monitoring in July 2026. The hopeful technology theme is that AI can improve if it is governed carefully. Anomaly detection, scenario analysis, control testing, and vendor monitoring can give human risk officers better visibility without replacing judgment. For public companies, the winner will not be the business that avoids all risk, but the one that can explain risk clearly, respond quickly, and keep customers' trust while commerce becomes more automated, personalized, and borderless.
COSO.
CIPRA. Legal subpoint. the legal risk center of gravity is shifting toward privacy, tracking technologies, automated decision-making, website disclosures, and data sharing controls. Because U.S. e-commerce law is described as a patchwork of state privacy laws, sector laws, FTC authority, and class action theories applied to online tracking and digital transactions. ICLG. 3. B2B payments and infrastructure FinTech. The payment rails are becoming the product. B2B payments are entering an infrastructure era in which the most important innovation is not a shinier checkout button, but the invisible plumbing that lets invoices, approvals, FX, settlement, reconciliation, and compliance happen with less friction. Payments Dive's B2B coverage shows that the sector's live news cycle is focused on payment processors, debit networks, agentic AI gaps in legacy B2B stacks, Nuviai's post-Payoneer strategy, ramp leadership changes, stablecoins, fraud prevention, and AI across industry events. That matters for e-commerce because online merchants are no longer just selling to consumers. They are paying creators, suppliers, carriers, marketplaces, advertisers, refund processors, cloud providers, and cross-border vendors in increasingly complex networks. Convera's 2026 cross-border payments analysis describes real-time rails, ISO 20022 deadlines, multi-rail strategies, and the G20's 2027 targets as forces pushing Treasury and accounts payable teams to modernize rather than treat payment change as a compliance chore. The stock market relevance is clear. Companies that own or orchestrate reliable payment infrastructure may capture more margin and data, while companies stuck with manual approvals, failed payments, and slow cross-border settlement may look operationally dated. In the bigger human story, better B2B payments mean a small exporter, a regional warehouse, or a family-run supplier can be paid faster and more transparently, which is the kind of economic oxygen needed before commerce can stretch from Earth-based marketplaces to lunar logistics fantasies. Payment Dive. Convera. Legal subpoint. B2B e-commerce is not legally frictionless just because the buyer is a business. Current U.S. guidance notes that consumer protection, privacy, electronic signature, FTC Act, state, mini-FTC, and online payment obligations can still affect B2B and B2C digital transactions depending on the context. ICLG. 4. RegTech compliance is becoming agentic and manual reviews are losing altitude. RegTech is turning into one of the most investable infrastructure layers in financial e-commerce because compliance teams are drowning in regulatory change while platforms face higher expectations around identity, AML, KYB, sanction screening, disclosures, privacy, AI governance, and digital asset oversight. FinTech Global's RegTech feed on July 16 highlighted stories on EU AMLR preparation, Irish fund authorization scrutiny, Malaysia's FTF upgrade, Hadrius raising capital to scale agentic compliance, connected compliance, AI-first tax software, identity compliance consolidation, and the failure of manual regulatory change management at scale. The pattern is important. RegTech is no longer just a cost center tool for banks. It is becoming a strategic layer for marketplaces, fintech platforms, payment processors, brokerages, and any e-commerce business that must verify users or monitor transactions. The 2026 Global RegTech Report metadata also describes a mature market where financial institutions have scaled RegTech across regulatory domains and where AI agents, machine executable regulation, and compliance automation are becoming central themes. In a positive future, compliance tools can reduce bad actors, speed up onboarding for legitimate customers, and make digital markets more trustworthy without forcing every small merchant to become a legal department. The realistic caution is that AI compliance systems need explainability, audit trails, and human escalation, because a black box control failure can become both a customer harm issue and a regulator-facing problem. FinTech. Legal subpoint. RegTech vendors and buyers should focus on explainable decisions, record keeping, privacy permissions, AML/KYC/KYB obligations, and vendor accountability. Because digital business law sources emphasize that fintech, retail, AI, and digital health organizations face overlapping privacy, security, disclosure, and consumer protection regimes rather than one clean national rulebook. ICLG 5. Institutional trading and market infrastructure. Tokenized markets are not replacing institutions, they're rewiring them. Institutional trading and market infrastructure are being pulled into the same modernization wave as e-commerce payments, but at a higher altitude where settlement, collateral, clearing, reporting, and legal certainty shape systemic trust. The IMF's July 2026 working paper on financial market infrastructures says tokenization and distributed ledger technology may let smart contracts perform more functions traditionally handled by central securities depositories, central counterparties, and trade repositories, especially around record-keeping, settlement, collateral management, and reporting. Crucially, the IMF does not frame this as institutions disappearing. It says functions that require legal certainty, governance, accountability, and discretion remain institutional in nature, pointing toward a hybrid model rather than a pure code-only market. For e-commerce and fintech investors, this connects directly to stablecoin settlement, tokenized deposits, merchant liquidity, programmable collateral, and faster capital movement between platforms, banks, funds, and suppliers. JP Morgan's payments outlook similarly notes blockchain-enabled 24/7 payments, tokenized money, and asset tokenization as tools that can reduce settlement friction and improve cash movement, while also requiring incremental adoption. The optimistic but grounded takeaway is that market infrastructure is becoming more like a spacecraft, autonomous where it can be, institutionally governed where it must be, and designed to protect humans, capital, and trust during high-speed movement. IMF. JP Morgan. Legal subpoint. Tokenized market infrastructure needs enforceable settlement finality, governance, disclosure, operational resilience controls, and accountable intermediaries, because the IMF specifically identifies legal certainty, governance, accountability, discretion, and new operational and governance risks as persistent issues in tokenized FMI models. IMF. Video description. Tomorrow's forward-dated deep dive report covers 5 e-commerce-facing stock market themes: corporate treasury, enterprise risk management, B2B payments, RegTech, and institutional trading infrastructure. The script tracks how AI commerce, real-time liquidity, regulatory automation, digital identity, tokenized settlement, and market infrastructure modernization are reshaping the financial technology stack. The tone is optimistic and human-centered. Faster payments, safer platforms, better cash visibility, and smarter compliance can help companies grow while protecting customers, suppliers, and investors. Sources include JP Morgan, ICLG, FinTech Global, Payments Dive, COSO, JD Supra, Convera, and the IMF. Video tags. E-commerce news, fintech news, stock market sectors, corporate treasury, cash flow management, enterprise risk management, ERM, B2B payments, payments infrastructure, RegTech, regulatory technology, institutional trading, market infrastructure, tokenization, stablecoins, digital identity, AI commerce, agentic commerce, cross-border payments, real-time payments, treasury automation, compliance automation, legal tech, financial technology, market plumbing, digital payments, fintech investing, e-commerce compliance, AI risk management, future of finance. Base thumbnail. Base thumbnail concept: a glowing futuristic financial command center with a digital earth, payment rails, compliance shields, and market candlesticks orbiting like satellites. Main text: fintech infrastructure boom. Secondary text: 5 stories before markets move. Color palette: deep navy, electric cyan, white, and a small gold accent for urgency. A, B/C testing thumbnail variables. A test thumbnail. Focus on a CFO-style dashboard with cash flow streams and a bold warning glow. Main text: cash is going real-time. Hook: Treasury's AI upgrade. B test thumbnail. Focus on a robotic compliance officer scanning digital IDs, contracts, and payment flows. Main text, RegTech just got agentic. Hook, manual compliance is breaking. C-test thumbnail, focus on tokenized stock certificates, smart contract rails, and a hybrid exchange in orbit above Earth. Main text, markets are being rewired. Hook, tokenization meets Wall Street.